So we are back at it again, and as you know, we are trading one strategy only, and one pair only, and one session only. London session from 7 a.m. GMT till 5 p.m. and pounds USD M15 time frame. And also the strategy is to take trades when you see a fair value gap. Is that okay? So if you don't understand fair value gap, you can watch ICT's 2022 mentorship. It's free on YouTube. So pretty much what I want to do is want to collect data to see if only you stuck to this strategy, trading only fair value gap during this London session only, would you be profitable in the long run? Is that okay? We are not going to filter out the trades with our daily biases and other blocks and swing highs and swing lows and previous day highs and day lows. Is that okay? We are simply taking the trades when we see a fair value gap. So currently we have fair value gaps on our chart, but this we are not taking this because they are stemming from what? The Asian session. We need one that stems from the London session, and then we'll be taking that. Is that okay? And this is what we aim to do every single day. So London session pretty much starts at 7. Frankfurt actually starts at 7 and London at 8 a.m. GMT. Frankfurt close at 4 p.m. and then London at 5 p.m. GMT. So we want to be done trading when the session is over. Is that okay? So pretty much we'll be waiting for fair value gaps. If we see a green fair value gaps, we will buy. If we see a red fair value gap, we will sell. And we'll be using a fixed risk to reward. That is a 1:2.5. Is that okay? We'll use 15 pip stop loss and 37.5 or 38 pip take profit, so that we are always aiming for a 1:3 risk to reward. So anytime we lose 1. Anytime we win 2.5. Is that okay? So yeah, preferably you can risk 1% per trade or 0.5% of your prop account per trade, and that is what we want to literally do. Okay, so we keep waiting. We realize that trading is also a waiting game. At the end of the day, you don't buy or sell because you have money in your account. You buy and sell because you have an edge. You see your edge playing. Is that okay? You see that, hey, my edge just showed up, meaning I just saw a fair value gap, so I need to get ready to take a trade, and that is just what we are looking for. So we just had our first fair value gap, which is a red fair value gap indicating we sell. So we literally put our sell position there with our risk reward of 1:2. Okay, going for 15 pip stop loss, 37 pip take profit, and that's what we have. So yes, market was actually trying to hit our stop loss, but at the end of the day, that is it. It's one or two things: either our stop loss get hit or our take profit gets hit. Are you getting it? So that is what we are looking to do. We take the trade when we see it, and we just wait. So this fair value gap is just so small, we'll ignore it. This one is just like a line. Okay, so our first trade just hit take profit. Okay, so if you are risking 1%, then account will by what? 2.5%. And if it had hit stop loss, then our account will be down by 1%. Is that okay? But the goal of this is to find out, will it be profitable in the long run? Sometimes you might end up having losing days, and sometimes you might end up having winning days. But at the end of the day, because of the risk to reward, right? The 1:2 risk to reward, your winning days are able to offset those losing days, and you still stay up profitable. Are you getting it? So you never allow one day's results put you off. Just stick to the rules of the game. We sit on our hands. We wait for a fair value gap before taking a trade. Without a fair value gap, we don't take a trade, because without a fair value gap, we don't have an edge to trade, and our edge is fair value gap. And you see, you realize that the more you sit behind this chart, you observe it. From my back testing and forward testing, I noticed that the period you normally get trade setup is when the London session opens. So from 8 8:30 to 9:30, you are likely to get a setup. Another period, 12:30 to 1:30, another setup. And also when the New York session opens, that's 2:30 to 3:30. So you can keep in mind these times, so that when you're on your chart, you don't just stay on your chart the whole day. Sometimes you can just come around these time periods or these time stamps, so that you don't miss out on such opportune trades. So yeah, as it stands, we just had one setup. We are still waiting for another setup. So yes, it's a waiting game, so we have to wait. If we don't see any fair value gap, we don't take any trade. But as soon as we see a fair value gap, we'll be taking the trade. Is that okay? If it's a red fair value gap, we'll be selling. If it's a green fair value gap, we will be buying. And that is what we'll be looking at doing. So at the end of the day, yes, you need to learn to wait. You need to learn to wait for your strategy. It's like we got a setup around 9:30, a hit take profit at 10:30. That's literally an hour, and ever since we've not had a new setup yet. So when the market normally gets aggressive, there's likely to be a fair value gap showing up, because when it gets volatile and it moves aggressive, it leaves a gap. So we have a buy fair value gap, so it means you are going to take a buy trade. We put our buy and we put our 15 pip stop loss with our what 37 pip take profit. We have also a third entry for a buy, so we also take that with a 15 1:2. So the trades have not been triggered. You see, the market keeps going up, it hasn't come down. So we are hoping that perhaps this market will be able to pull back, come down, and activate our trade. Is that okay? And this really got close, but you can see our trade. Okay, our trade just got activated, and that's what we've been waiting for. So both trades are activated now. These two fair value gaps, it looks like the second one is heading towards stop loss. But at the end of the day, we are taking the trade because we've seen what a fair value gap. Without a fair value gap, we wouldn't be in this trade. But as long as we have a fair value gap, then that is our edge, or that is our trigger to take this trade or to be in this trade. Is that okay? Without it, we are not in the trade, but when we see it, we definitely take the trade. So yeah, we have the market coming back to our entry, putting us in a little drawdown. But yeah, the two trades are still active. The stop loss have not been hit yet. And yes, we have another fair value gap. Okay, but we can ignore this because you're already in. And yeah, it's time. It's 7:15, so all trading cease. All trading cease. Is that okay? So we had these two trades also hitting our take profit. It came close to hitting our stop loss, but it went in our favor. So we had three setups, 1, 2, 3, and all three what? Fortunately for us, it hit take profit. Okay, it hit take profit, sticking to what? An automatic 1:2.5, 15 pip stop loss, always on every trade. And yeah, so if we risk 1% per trade, this would have given us 2.5, another 2.5, and another 2.5. So basically our trading account would have been up by 7.5, and that would be a good trading day for us. So if we had a bad day the day before, then this would have been able to offset that bad trading day. Is that okay? So yeah, this is the data we are trying to collect on a daily. When we see the setup, we take it. When we don't see it, we don't take it. Yeah, you are seeing fair value gaps, but we are done trading for the day, because our trading window is from what, 7 a.m. till 5 p.m. Are you getting it? So yeah, a splendid day to you guys, and catch you in the next one. Peace out.